DSCR loan interest rates explained and 5 ways to actually lower yours. You found the perfect rental property. The numbers work. You are ready to pull the trigger. Then you call a few lenders and they quote you rates that are 2% higher than what you see on the news for regular mortgages. 7%, 7.5%. Some of you have been quotes 8% or higher. And now you're wondering, is this normal? Am I getting ripped off? Should I even buy this property? I'm Eli, the DSCR Pro, and in this video, I am going to answer every question you have about DSCR loan interest rates. How do interest rates affect real estate investing? What makes DSCR rates higher than conventional loans? And most importantly, how do you reduce interest rates on an investment property loan? By the end of this video, you will know exactly what determines your rate and 5 specific strategies to get the lowest rate possible on your next DSCR loan. Let's break it down. Here is what we are covering today. First, I will explain exactly how DSCR loan interest rates work, why they are different from conventional rates, and what factors actually determine your specific rate. Second, I will break down the real math. I am talking about a $500,000 loan at 6, 7, and 8%, and I will show you how a single point difference costs you over $100,000 on one property. Third, I will give you 5 proven strategies to lower your DSCR loan interest rate. Things you can actually do before your next deal to save thousands of dollars. And if you stay until the end, I will share how one of my clients got quoted 8% by 3 different lenders, then locked in at 6.75% using exactly what I'm about to teach you. That is over $150,000 in savings on a single property. Let's get into it. First, let's address the elephant in the room. Why are DSCR loan interest rates higher than the rates you see advertised for regular mortgages? Here's the truth. DSCR loans are investment property loans. They are designed for real estate investors, not homeowners. And they come with a trade-off. On one hand, you get massive flexibility. No tax returns, no W-2s, no proving your personal income. The property qualifies based on its rental income, not your complicated financial situation.
I like it a lot.
That is a huge if you are self-employed, if you write off a lot of expenses, or if you already own multiple properties. On the other hand, because these loans are based on the property's income instead of your personal income, lenders see them as slightly higher risk. And higher risk means higher rates. But here is what most investors don't understand. The rate premium is usually only about 0.5 to 1.5% higher than conventional investment property rate, not 2 or 3% higher, unless you are doing something wrong. And that premium, it's often worth every penny, because a conventional investment property loan still requires 2 years of tax returns, extensive documentation, and can take 45 to 60 days to close, if it closes at all. I can't tell you how many investors have come to me after a bank canceled their deal at the last minute because of some documentation issue. The real question isn't why are DSCR rates higher. The real question is, how do you get the best possible DSCR rate for your situation? Let me show you what actually determines your rate. Your DSCR loan interest rate isn't random. It is based on 5 specific factors, and understanding this is the first step to lower your rate. Factor number 1, your credit score. This is the single biggest factor. The difference between a 680 credit score and a 760 credit score can easily be 0.5 point to a full point on your rate. On a $500,000 loan, that is $50,000 to $100,000 over the life of the loan. Most DSCR lenders want a minimum of 660, but the best rates start at 720 and above. Factor number 2, your down payment. More skin in the game means lower risk for the lender, which means a lower rate for you. At 20% down, you will get decent rates. At 25% down, you will see better pricing. At 30% or more, you're you're in the best rate here. Every 5% increase in your down payment can save between an eighth and a quarter of your rate. Factor number 3, the property's DSCR ratio. This is the debt service coverage ratio. Basically, that's the rent cover the mortgage. A DSCR of 1 means the rent exactly covers the payment. A DSCR of 1.25 means that rent is 25% higher than the payment. Lenders love properties with strong DSCR ratios. A property with a 1.25 DSCR will get better rates than one barely hitting 1.
That's cool.
Factor number 4, the loan amount. Smaller loans often have slightly higher rates because the lender makes less money but does the same amount of work. Loans under $150,000 typically have rate adjustments. The sweet spot for the best pricing is usually $200,000 to $1 million. Factor number 5, the property type. Single family homes and 2 to 4 unit properties get the best rates. Condos, especially non-warrantable condos, may have rate adjustments. Rural properties or unique property types can also affect pricing. Now that you know what determines your rate, let me show you exactly how much these factors actually cost you in real dollars. Let's use a real sample with today's numbers. You're buying an investment property for $625,000. You put down 20%, that is $125,000. So your loan amount is $500,000. Now let's look at 3 different interest rate scenarios, 6, 7, and 8. At 6%, your monthly payment is about $29.98. At 7%, it jumps to $33.27. And at 8%, you are paying $36.69. That is a difference of $671 a month between 6 and 8% on a rental property. That is not just numbers on a spreadsheet. That is the difference between a strong positive cash flow and a barely breaking even. That is $8,000 per year that either stays in your pocket or goes to the lender.
Oh, wow.
But the monthly payment is just the beginning. Over 30 years at 6%, you will pay about $579,000 in total interest. At 8%, you will pay over $821% in interest. The difference between 6 and 8% costs you over $240,000 in extra interest. That is almost half of what you borrowed.
Oh my God.
That is a down payment on your next 2 investment properties. And here is what makes this personal. When you make your mortgage payment in year 1 at 8%, about 80% of that payment goes straight to interest. Only 20% actually reduces your loan balance. At 6%, it is 72% to interest and 28% to principal. That is 40% more equity building from day 1. This is exactly why the 5 strategies I'm about to share matter so much. Even half a point improvement on your rate can mean tens of thousands of dollars staying in your pocket. All right, here is what you came for. 5 proven strategies to get the lowest possible rate on your DSCR loan. Strategy number 1, get your credit score above 720 before you apply. I know this sounds obvious, but you would be amazed how many investors try to buy a property with 680 score when they could hit 720 with 2 or 3 months of preparation. Pay down credit card balances below 30% of your limit. Don't open new account, don't close old accounts. If you're at 700, getting to 720 could save you a quarter point. If you're at 680, getting to 720 could save you half a point or more. On a $500,000 loan, that half a point is worth over $50,000 in interest savings. 3 months of credit optimization is worth it. Strategy number 2, put down 25% instead of 20%. I know this means coming up with an extra $31,250 on a $625,000 property, but that extra 5% typically saves you between an 8 and a quarter on your rate. Plus, you start with more equity and lower monthly payments. Here is a secret more investors don't know. You can often use seller concession to buy down your rate instead of reducing your down payment. At DSCR Pro, we help investors structure deals where the seller contributes to closing costs and we use that money for a rate buy down. I have seen clients drop their rate by half a point this way without bringing extra cash to closing. Strategy number 3, choose properties with strong DSCR ratios. When you are evaluating deals, don't just look at the purchase price and potential rent. Calculate the DSCR. If the monthly rent is $4,000 and the estimated mortgage payment is $3,200, your DSCR is 1.25. That is solid. it. If the rent is $3,400 and the payment is $3,200, your DSCR is 106. You will pay more for that loan. Some investors chase appreciation in expensive markets and end up with properties that barely cash flow. Those properties come with rate penalties. The best DSCR rates go to properties that clearly pay for themselves. Strategy 4, work with a company who has multiple investor relationships. Here is something most investors don't realize. Not all DSCR companies have the same rates. At DSCR Pro, we work with over 30 different investors, groups, and lenders. That means we can shop your deal to find the best pricing for your specific situation. I had a client last month. Let me tell you about him. His name is Frankie. He had been working with other companies for 5 months. 5 months of back and forth, endless documentation requests, and moving goalposts. When they finally gave him a rate, it was almost a full point higher than what he expected. He came to us frustrated and almost ready to walk away from the deal. We shopped his file to our lending partners and got him approved at a rate 0.75% lower than what the other company quoted. And we closed in less than 30 days. That is over $75,000 in interest savings on a single property, just by working with a company who has options. Strategy number 5, consider a rate buy down if you're holding long term. If you're planning to hold a property for 7 years or more, paying points up front to buy down your rate often makes financial sense. 1 point, that is 1% of your loan amount, typically reduces your rate by about quarter point. On a $500,000 loan, 1 point costs $5,000. If that drops your rate from 7.25 to 7, you save about $83 per month. You break even in about 60 months and save money every month after that. For long-term buy and hold investors, buy downs are one of the smartest moves you can make. And remember, you can often use seller's concession to fund the buy down, so it doesn't even come out of your pocket. Let me tell you how this works in real life. One of my clients, Atanda, he has been a nurse for 25 years. When he first started looking at investment properties, banks kept turning him down because his tax returns didn't show enough income. He writes off a lot of expenses like any smart professional. He came to me and we went through all 5 of these strategies. We waited 6 weeks while he optimized his credit score from 695 to 738. We found properties with DSCR ratios above 1.2. We structured this deal with a 25% down payment. And because we work with over 30 lending institutions, we found him pricing that was significantly better than what he had been quoted elsewhere. We have now closed 3 DSCR loans together. He told me recently, after 25 years working as a nurse, I finally feel like I am building real wealth with these investments. He didn't get lucky. He got prepared, and that preparation saved him tens of thousands of dollars across his portfolio. Now that you understand DSCR rates, the next question is how to invest the right way. Click the next video, how to invest in real estate, and I will show you what actually protects your cash flow before you buy. And if you have already found a property or you have been quoted rates that seem too high, call or text me at 718-300-3503. Tell me your credit score, the property you are looking at what rate you have been quoted. The DSCR Pro team will give you a straight answer in 24 hours. Can we beat that rate, and by how much? We work with over 30 lending partners. We close in about 4 weeks, and we don't play games with last-minute rate changes or surprising requirements. No moving goalposts, no endless documentation requests. Just the best rate we can find for your specific deal. I am Ali, the DSCR Pro, and I help you turn today's challenges into tomorrow's positive cash flow. I will see you in the next video.